We're extremely excited to be here. This is going to be an amazing panel. We have two of the OGs of not just Latam tech, but Latam fintech. For those of you who do not know, I'll read a couple of brief intros. We have, first of all, Sergio Fogel, who's founder of dLocal, amongst many other companies, actually. And dLocal is a cross-border payments platform, started in Latin America, but serves globally in more than 30 countries around the world. And Sergio Fogel has now continued to found another fintech, Datanomic. So Sergio is not stopping anytime soon. And then also we have Sergio Furio. So we have the two Sergios here. Sergio Furio is the founder and CEO of Creditas, the leading fintech platform operating in Latin America across 3 ecosystems: home, auto, and employee benefits, with over 4,000 employees. And Creditas is also one of the top tech companies in Latin America. As a reference, I'm sure all of you have heard of it. And Sergio is also a very active member of the tech community. As for myself, my name is Miguel Armaza. I'm a co-founder of Gilgamesh Ventures, where we invest in fintech in Latin America and also the US, with most of our portfolio being in Latin America. And I also host the Fintech Leaders podcast, where I get to sit down with amazing people. And I know some past guests are in the audience, so excited to be here. So let's just get right into it. I guess I'll call you guys by your last names, since you're tocayos. But let's talk a little bit about innovation. Of course, to be successful in the tech world, you have to be innovative, right? And you have to always be challenging the status quo. And I wanted to kind of refer back to one of my recent podcast conversations that I had. And this was with Mike Cagney, who's the founder of some very big fintech companies, Figure and SoFi. And he referred that to be truly innovative, to build innovative products that are truly revolutionary, you can't really ask the customer what do they want. You have to instead build it, put it in front of them, and see how they react. And I wanted to get your reaction to this quote, and also hear a little bit about the innovative process that happens within your companies. And maybe we can start with Furio.
Yeah, hi, good morning, guys. Glad to be here. Congrats, Brian, for doing one of the most amazing events already in the first edition. So congrats, kudos for you. Yeah, so Mike's point is probably like an exaggeration. I would recommend everyone to ask the customer what they want. At least it's a starting point. The tricky thing when you ask the customer is that they're going to come with, in most of the time, are going to come with very plain answers, very basic. If you ask them, if you want a loan, what does it look like? Obviously, that loan is going to be cheap. It's going to be long-term, easy to pay. And if I don't have money, then no one is going to blame me, and so on. So I think it's a great exercise. Yeah, but you know, the customer is never going to tell you, take my car as a collateral to lower the cost of my debt. The guy is never going to tell me, you know, instead of giving me like a credit card that puts me into a revolving, protect me against that and move that balance into something else. That needs to come from your realization of how things work in the back end, so that you can provide that amazing user experience. Most of the time, people think that, you know, UX is all about, you know, what the customer wants, how do they want to position themselves, and obviously that's very important. But it's also as important as that to really understand how the mechanics of your product work, what you can do, what are your levers. I mean, obviously I can lower my cost, but there's a limit for that. So I need to find like other levers on that. 10 years ago when we started in Creditas, there was no such a thing as a car equity loan, even today. We have like a really like a hard time in explaining the customer let me take your car, what the hell is that? Let me discuss with my partner and then come back. And but that's a mental process that all customers need to do. And I agree with the part of Mike's point on innovation, that the true innovation really comes from the teams that are working on this. Many teams, I was like talking last week with one of our product managers, pointing to, we need to do deeper discoveries. And obviously, yes, it's true, but this year I think it calls to do more with less. And some of those discoveries, we just need to realize that we have like so many people talking to customers directly, naturally. So why don't you, instead of like doing a discovery and spending like $100,000 to do like a bunch of tests, why don't you actually listen to the phone calls of our customers, what they're telling us, how can we improve the product based on that? So innovation comes really from that type of things, very basic, but you need to be very attentive to
that. There's a famous, I don't know if it's true or if it's an urban legend about Henry Ford, that they told him if you ask customers, what would you like in a car, they would say, I want a faster horse. So depends on the level of innovation. If it's something that people actually know, then I completely agree with Furio, with Sergio. If it's something that is really revolutionary, like it was, for instance, the iPhone, then it's very hard. You need to create the product and then put it in front of the customers. Having said that, I think there are two completely different worlds when you have a startup. One thing is if you have a startup that sells consumers, and a completely different beast is selling to businesses. If you're a founder and you have a B2B product, chances are that your customer knows what they need perfectly well. They probably know about your industry more than you do, but they have issues executing and building the product. So in many cases, you go to your customer, you said, I'm going to build this. And they tell you, no, don't build this. Build this other thing. If you build it right, I will buy it from you. And in my experience, when I first started my first company, I didn't even, there wasn't any VC money available. Sometimes customers would even give you the money. They would say, build this, here's the money, build it for me, and I will buy it from you. So that's an ideal situation. You cannot have that in business to consumer. It's a completely different business.
And how do you manage the fact that every business, every customer in the B2B company is going to have slightly different requests, right? And how do you make sure you're not building a lot of one-offs?
Yeah, that's a death trap. If you're going to adapt your customer to your product to every single customer, you're dead. Because you'll end up having millions of versions, it's impossible to maintain, it's going to drive you crazy. But normally there are a few customers that really know the stuff, that they can show you the way ahead, and with those, maybe it's, I don't know, maybe it's 2 customers, maybe it's 3, maybe it's 5, and it's very useful sometimes to have a customer board that can help you define the product, but then your product team has to decide, okay, this I'm going to do, this not, but their input is going to be super valuable.
And while we're on this topic, Furio, I've heard you speak in the past that you mentioned that it wasn't just about convincing customers to take this product, but especially partners in the ecosystem, investors, because people thought that this wasn't going to work in Brazil. How did you go around that convincing?
Yes, just being stubborn, I guess. So I remember in the early days, like everyone saying, dude, but what the hell are you talking about? Brazilian banks are the most efficient in the world. Look at the cost-to-income ratio. Look at the ROE metrics. Look at, and obviously there was like this myopia. If you charge a lot, it looks like your economics are amazing, but it's just that you're just charging a lot. And yeah, when you start like bringing in like things like, I'm going to do a home equity, I'm going to do a car equity, and obviously the pushback is, Brazilians don't like to lose their house. I say, no, Americans love to lose their houses. I mean, it's pretty obvious. So I guess that, we constantly face criticism. Criticism that starts with ourselves, by the way. We are the first ones. But probably we're like too optimistic to just like stop. We just want to keep pushing, keep pushing, keep pushing. And at the end of the day, I think that, okay, it's true that 2020 and 2021 were the years of storytellers. But that's just, it's momentary. Yeah. At the end of the day, the company speaks about itself. You need to perform. The numbers will tell the real story and not your mouth. So I think that, I'm glad that we're in 2022 to a certain extent, because then we can, put heads down, focus on working, focus on delivering what we need to deliver so that everyone understands that, this is an actual product. This is an actual business. It's not because I'm saying it. It's because you look at the metrics, look at the economics, look how happy the customer is. And that would speak for itself. But obviously, every time that you start, you're always going to be facing a lot of criticism. Otherwise, your business is crap, because then if everyone is loving it, then everyone will be doing it, and they are not doing. The reason why, I don't know, David Vélez has been successful was because no one had the guts to actually say, I'm going to launch a credit card. I mean, you were looking back in 2013, everyone saying, what the hell is that? You're doing a credit card? What is that? I mean, why? We have like so many. So contrarians really are the ones that end up like winning the game, right?
Speaking of 2020 and 2021 and the big shift that we have experienced in the tech world, one of the concepts I wanted to touch on is the concept of the wartime CEO versus the peacetime CEO that was popularized by Ben Horowitz from Andreessen Horowitz. And it's the fact that a peacetime CEO can afford to build a lot of things that, you can only focus on those when your company is actually growing, doing well, when you're not facing existential threats. Whereas the wartime CEO, cannot afford to make some of those decisions and has to have a completely different approach. In the startup mode, you're always in wartime in many senses, but especially 2022 is an especially challenging year. And my question to both of you, but maybe we can start with Furio, how has your leadership style adjusted over the last, call it, year as the outlook has shifted?
Yeah, well, the first thing is Ben Horowitz was not born in Sao Paulo, because then he would realize that there's no such a thing as being like a peacetime CEO in Latin America. What the hell is that? I mean, we're entrepreneurs in Sao Paulo. Brian was talking about this. It's very hard. I mean, it's when it's not because you don't have capital, it's because the market is crazy, or it's not, it's competition. If not, it's the government. It's always taxation. There's always a crisis in Latin America, and that's probably the beauty of it, right? So I remember the CEO of Magalu being asked, I mean, it's so difficult to do business in Latin America. It's so difficult to do business in Brazil. The ICMS, the taxation, logistics. And then the guy looked at that and said, well, actually, if it was not because of that, Amazon would dominate the entire country. So the difficulty is our friend. And we need to feel proud about it. It's less me, less complaining. It's so difficult. It's much better to be in Silicon Valley. You go to Silicon Valley and then start competing with a million guys that are smarter than you are. Not that we don't have like a lot of smart people here, but we have like lack of talent, we have lack of capital, we have lack of a bunch of things. And that ends up being our stamina, the reason why we wake up every morning and we want to kill it. So I don't like peace. I think that peace makes you weak. It creates a culture that doesn't survive, doesn't thrive. And every time that you wake up in the morning and you have like a lot of difficulties, you're building yourself a bit stronger. And probably I don't come from a millennial culture. That's probably true. I'm too old for that. And I was born with a family culture which is a lot about, dude, I mean, stop like mimimis and just work hard. You were not born tall and smart, but you are born as a warrior, and you just need to do it. And I think that 2022 is, in part, is a monument to those type of entrepreneurs. And it's a way in which we're going to be killing the mimimis, killing the storytellers, and then focusing on delivering, on executing, and on building companies that can be successful forever. Now, just sorry for the quick advertising campaign to be like I think it's a honor to be an entrepreneur in Latin America for all these reasons. Yeah. Now, it's true that in 19, in 20, in 21, you had to be softer. You had to be like a CEO that was like embracing a new reality with a lot of people wanting to be more engaged with everything, wanting to have like a more work-life balance, and so on. So you had to adjust yourself. You had to be like more inspirational to certain points. Inspirational in the sense that people want to hear the vision, and then you constantly talking about that. And we had to adjust ourselves and adjust our language, adjust the way that we were managing the business. And obviously more recently, over the last 6 to 9 months, it's a bit back to the worst war that we have faced probably over the last 10 years, which is absence of capital, high interest rates, high inflation, a war for talent that is still on. So we cannot forget that the talent is what actually moves the companies. It's not the founder, it's the team that is around you. And I think that now we are trying to twist a bit the messages and just remind everyone in our rooms that really doing like a big effort in building a company is the most important thing. Being passionate about what we do, really working hard, it's quite important. And at the end of the day, at least the way that I've seen this, you need to delegate, you need to give everyone like their chances to actually contribute to the business, but you also need to promote with example. If you are working hard in getting into the details, if you take an analyst or an intern and then show everyone that you still can solve problems with an analyst together with you, and you don't need like a huge structure to solve problems, I think that inspires people. And if they inspire them in the right way, do more with less.
Fogel, I think you have a very interesting point of view because you've co-founded several businesses across many cycles, and now you work with more than one CEO, with more than one co-founder. How you observed your co-founders across your different companies, react throughout the last year?
First of all, I completely agree with Sergio. I don't know what a peacetime CEO is. I don't like it. All the companies I'm involved with, people are frugal. People wear their asses out working. You just mentioned the word millennial. You know that millennials don't really like to work. They don't have commitment. They just want to go to the beach. That's bullshit.
We're going to be very popular in this room.
Say it again?
We are going to be very popular in this room.
Yes. It's bullshit. Come on, look at these guys. What's the age here? They're all millennials. Some of them are, what comes after millennial?
Gen X, Gen Z?
Gen Z.
Yeah, well, you have a millennial right here.
Yeah, I mean, my experience, I'll tell you a story. We have a case, we needed to send someone to China for 2 years. And our CEO was thinking, where can I find the right person? Because we wanted someone over there, I'm talking about dLocal, we wanted someone to bring our culture and work together with the Chinese team. So then his light bulb went on. He said, this guy that worked for us in the past, he was great, but he's studying. I'll call him and see what he's doing. He called him. He said, listen, we're looking for someone that wants to go to live in China for 2 years. And I thought of you. He said, well, I'm traveling. I'm right now on vacation in Spain. But sounds interesting. I don't know. I need some time to think about it. He said, okay, how many days do you want? He said, what do you mean days? I'll answer in 2 hours. Half an hour later, he calls, he says, you know what, Seba, I'm going to China. He said, okay, you're in Spain, you need to go back, pack everything. He said, what are you talking about? I'm flying this evening. And that's the level of commitment that we are seeing in the young people. The thing is, if you don't give them meaning, then yes, they don't care. When they're building something, when they're part of the team, especially when you're in tough times and you say, okay, guys, we all need to work. The party's over. Everybody needs to roll up their sleeves, work together, be part of a team, go out and kill. It's the ideal time for wartime people, but that's the only thing I've ever known.
Speaking of geographic expansion, let's talk a little bit about that because both dLocal, Creditas, and your other companies, they're global companies at this point. What have you learned about geographic expansion, international expansion, going to a new culture, there's a new language? Is there a playbook that you found that works particularly well?
It's can I say hard, for other words, and it's very, very hard, first of all. You have to do it. It's very hard culturally because if you only have local people in each geography, then they lose contact with the mothership. If you send people over, it's then you don't have the local touch, and at least in the business that we're both at, regulation plays a very big part. So you have to be in contact with the regulator, you have to be in contact with the local banks, with the authorities. So you need local people for that. The formula that we found is to have something hybrid, send people that have the culture embedded over. So for instance, today we are all the time offering people, would you like, today we have a Uruguayan managing the office in Singapore, we have 2 Uruguayans in China, we have people from Argentina in Africa, we have people from Colombia in Africa. We really encourage people to move to other places. With the pandemic, it's helped because during the pandemic, our developers were all over the place. You call someone and said, can you come over for coffee? Oh, no, I can't. I'm living in Costa Rica now. So that makes it easier. But the hybrid formula of having locals together with a few people that already have the culture works. And we do a lot of offsites or, I don't know, gathering retreats in different parts of the world that people travel to. So that's a bit... the other thing is that in our case, most people are remote. Even the CEO is working remotely.
How about on the Creditas side? Because you started in Brazil and you were local in Brazil for several years, but then you expanded to Mexico. Did you also take this approach of hiring local and maybe sending some culture carriers from Brazil?
Yeah, no, the first learning is international expansion is extraordinarily difficult. There are very few cases of companies that have been able to move from, I don't know, from Sao Paulo to Mexico or from Mexico to Brazil and be successful. It's very difficult, cultural-wise. It's about like focusing your resources. I mean, just like building a company, especially if you're B2C. If you're B2C and you need to build your own brand, you need to have like millions of customers. I mean, it's building a new company. It's a new problem that you're facing. So why on earth are you going there? So I was like very contrarian on doing international expansion, and we didn't do it for 8 years. Then in 2020, we decided to do it. And it was with a mentality of almost if it was like a financial investment. The reason was we got an offer to buy a company there. We looked at the company. We liked the company, but we didn't like we liked the market, but we didn't like the company. So we said, why don't we invest in a team to actually build and start up? So that's the mentality. But the management team is not involved in the Mexican operation. It's a completely separated entity with their own management. There's like some support here and there, but it's very difficult. I would say unless you have a business, and it's a bit in your case happens this, unless you have a business that only has like 10 customers in every geography, I just wouldn't do it. I mean, I would just like focus on your natural market. Obviously, if you are coming out from a small country, it's easier to do international expansion than if you're coming from Brazil. But if you're in Brazil, just like dominate the market first and then go to somewhere else. I just wouldn't do it.
You're not calling Uruguay a small country, are you?
Not at all.
This is a year that has seen a lot of fluctuations in the FX market, and you deal with dozens of currencies. How have you managed? How have you navigated that FX? Call it FX risk.
We have, if we're talking about dLocal, we have a whole team that does that. That's the nature of our business, so that's a very core area. We try not to have exposure to FX, even though in some cases we could have made a lot of money, but that's not our business. So we try to hedge the FX risk as much as possible. We end up having maybe, I don't know, 1 or 2 days of exposure, but no, not more than that. There are some geographies that's very hard to do, like, I don't know, India or Nigeria, but we try to hedge that.
So, Furio, Creditas is becoming acquisitive. You recently bought a bank, and Bank Brazil. Tell us about this decision, and maybe tell us how you want to evolve the liability structure of the company going forward.
Yeah. So first, I think that M&A is not suitable for, in general, for the startup world. It's very difficult. You're building a culture, you're building a team, so it's very hard to generate value with M&A. Having said that, I think that we are like a bit of an exception there. Back in 2013, we started with an acquisition. When we were like 7 people in the team, we bought another company that was another 7 people in the team. So I'm contradicting myself. But then we didn't do anything until 2019, where we bought Latitud, which was payroll loans. They were like a team of 40, 50 people. Today, that business in just 3 years represents 20% of the revenues of Creditas. So it has been like a tremendous journey. It has multiplied 100 times versus when we bought the company. So, super successful case. We did like a number of acquisitions last year. We got into insurance by buying Minuto Seguros, which was the largest digital insurance broker in Brazil. We had no clue about insurance, but we saw the potential of the cross-selling between the insurance product and the lending product. We did the investment in Volts, which now has become the largest electric motorcycle manufacturer. And you say, okay, a fintech company buying like an electric motorcycle manufacturer, that's pretty out of the box, and definitely it is. But we own 40% of the business, super proud of that. They now do 3% of the new motorcycles in Brazil, which is like an amazing feat. And obviously you generate a bunch of loans through that. So a company with close to $200 million in revenues by themselves, standalone. Now it comes to the license. So we have been sympathizing with the idea of having our own deposits base for a while, not in order to completely migrate our funding structure into deposits, but just as a complement, just as a way of diversifying. Every time that you go to Faria Lima and want to fundraise in capital markets, the investors know us very well because we do a securitization every 20 days. So they say, okay, so Creditas is again coming into the office. And when you do that, everyone starts like realizing that you are dependent on them. So they end up like having like a bit more of power against you. If you suddenly have an alternative, then you can negotiate better with those guys. So that was very important for us. So yes, we bought a bank. We bought a bank in the middle of the largest VC crisis that we have faced, and it was like a perfect match for the plan that we had designed to continue growing 2x every year. So today we are growing 3x versus last year. For the next year, we are planning to do 2x, and we want to become profitable. And the banking license really helped us in like speeding up the roadmap for that. Now, we don't want to become a day-to-day bank. That's not what we do. We love what Nubank is doing, and we partner with Nubank. So why would I just like launch a credit card and a checking account? I don't need that, but I want to have a deposit space. So it's a way of, and I think that this is like the type of M&A that I would encourage everyone to look at in late stage in the current scenario. It's an M&A that helps you in speeding up your roadmap to profitability, because this is what 2022 is all about.
So speaking of capital markets, we have to talk about dLocal's IPO. You successfully went public about a year and a half ago in the NASDAQ. Truly an example for the region, for the industry. Maybe tell us about this process, but specifically, what would you advise late-stage entrepreneurs and entrepreneurs who are looking to that eventual IPO? How can they better position themselves, particularly now that the window is definitely closed, and they have some time to think about it? Maybe it would be very helpful, I think, for everyone here, if you could share your experience of the IPO.
Sure. First of all, the process of going public is a very, very long, very hard process. It's not for everyone. It takes a lot of effort, lots of distraction, and it's something that you cannot hire a bunch of MBAs and tell them prepare the IPO. It's going to take lots of resources from the people that you need the most to run the business. So it's going to be the CEO, the CFO, the COO, the legal team, the tax team. Everybody is going to be super involved. So that's it's not for everyone, and it's also being a public company is also very expensive. You need to expensive in terms of actual out of pocket money, but also expensive in terms of things that you cannot no longer do. You don't have the same flexibility that you had before. For instance, you need to comply with SOX rules. You need to have contingency plans for everything. You need to have succession planning. There's quite a lot of work, additional work that is very destructive. About the process itself, there are a few things that everybody at a very early stage should take into account. For instance, in our case, when we started the company, having audited financial statements, it was always something that, well, let's do it later. So our accountant at the time, if I could have her running audit or opening a new bank account, I told her, no, worry about the bank account. You need to change that mentality. You need to have audited statements with a good auditor. In our case, we had to change auditor. And when you change auditor, you need to go public with 3 years of audited financial statements by a Big Four company. We had 3 years. We had more than 3 years, but not with a Big Four company. So we had to restate because they will not buy what the previous guy did. But I think the most important lesson in our case was to have the right investor. In our case, we have an investor, as investor General Atlantic, that they were our main investor. I see many companies that have 10 different investors. I think it's okay, but you need to have at least one that has enough skin in the game that your company is important enough that they will be in the ship with you. And in General Atlantic, we found that partner. And when they came to IPO, they roll up their sleeves and they were part of the team. We would not have been able to go public without them. So that's my main message. Find the right investors from early on and have an investor that can help you throughout the process, that did it many times and that already has all the contacts and all the know-how of how to do it.
How about working with the pre-IPO investors? As a Latin American company that's building for the world, how was the dialogue with the truly pre-IPO investors?
Normally, first of all, I wasn't really involved in that process, so I cannot help you much. The pre-IPO investors normally are there. It's people that invest, I don't know, maybe 6 months before the IPO, and many of them are there for the quick money. So they want to invest 6 months before and sell at the IPO or a few months later. They will probably not help you very much. You actually want people that, because at the end of the day, if you go into IPO, you need people that really know the company from inside out, that they know how tax is dealt with, that they know, in our case, that's a very important part, that they know how you account, that they help you with time. If you're with IFRS, you need to move to GAAP. So those are things that you need to be involved. Normally, someone that enters 6 months before the IPO will not help you.
Furio, how about Creditas thinking about a possible IPO? You know, what are your thoughts on that? And I'm sure you can't share too much, but you know.
Well, I guess that in the current moment, it's not something that you can decide. It's something that the market will decide when that will happen. The markets are currently closed. I think it's by far the largest crisis that has happened over the last 20 years in terms of the time without having IPOs. And it doesn't look like it's going to improve anytime soon. So now people start talking second half of next year, with interest rates now in the US now pointing toward 5%. low appetite from investors in just like investing. It's not even about the valuation or the multiples. It's about the appetite of getting into a new company. What from our perspective looks like very straightforward is that, heads down, focus on delivering a high growth company, 2x, and focus on delivering a company that is profitable. I think that's what investors are going to be looking for when the markets start re-engaging with tech IPOs, and that's where everyone needs to be focusing on. We've always said that we sympathize with the idea of bringing Creditas public. It's a company that relies a lot in capital markets, that transparency looks like the name of the game in order to lower the funding cost, the operational cost. It helps in branding. It helps in accessing larger pockets of money. And some of our investors are already like, public investors. We have Fidelity, we have Wellington, we have Advent, we have SoftBank. So those are the type of guys that you want to have as partners so that whenever the time comes to actually do an IPO, they can help you in managing that transition. I think that, a public companies IPOs don't have like an easy life. They are really dependent on every quarter. You need to deliver every quarter, right? So it's if you need to do like a lot of experimentation, you better do it today. And I think that we have made like a lot of mistakes over the last 10 years. We have experimented a lot, including buying electric motorcycles and reconditioning cars and doing whatever crazy thing that comes to our mind. But when you come into public markets, you need to go straight forward with a message. This is my company. This is what I'm going to be doing. And especially in these days, investors need to look at the company as, it's profitable, it's going to continue growing, it's going to generate a high ROI. If you just focus on that, then the multiple is like a secondary discussion. Especially because private multiples are converging towards public multiples when you advance in the face of the company. So, like a tough road ahead.
Speaking of investors, oftentimes when I talk to someone who's considering investing in Latin America and Brazil, maybe one of our LPs, I explain to them that Brazil is one of the best fintech markets, not just in Latin America, but globally. And one of the reasons is the regulator, the central bank, actually being very friendly towards fintech companies. And there's a long list of reasons and list of ways they've done this. Furio, you've actually been working with the regulator for the last decade. Tell us about your experience partnering with the regulator, working, and also you've seen it evolve from back when they were in 2013 to today.
No, the first time that I got a call from the central bank, I freaked out. I was back in 2015. And the assistant of Octavio Damaso, which is the head of regulation in the central bank, reporting directly to Roberto Campos, the assistant called to our customer service. And then a guy came to me, like running, the central bank is at the phone. They want to talk to you. And I say, holy shit. So now it's over. Because if you remember, back in 2010, we had experiences in Brazil like Fairplay that was shut down by the police, right? I was operating in fintech, right? So I was freaking out. They invited me to go to Brasilia, and I put myself a suit for the first time in 5 years at that point, and went to Brasilia, and there were like 20 people in the room waiting for me, and they were with the notebooks. They were like, they wanted to learn, and I found that fascinating. The ability of the regulator in Brazil to actually support entrepreneurs. They had like a very clear agenda, which is I want to lower rates, I want to foster innovation, I want to foster competition. I say, well, you can be my pitch deck. Can you just repeat it again? Because I'm going to put it in my pitch deck and I will send you my investors so that you can tell them that you're going to be helping us. And the experience was amazing. In 2017, we started collaborating with the central bank in bringing the regulation of for credit lending, for fintech credit lending in Brazil. And it ended up being an amazing opportunity for many startups to actually be able to be independent. So that's great, and definitely that's a tailwind. But I wouldn't say that the reason why fintech in Brazil is because of the regulator. They are helping, they are an enabler, but it's the conditions. I mean, we have like a market that is completely, it's fucked up. I mean, it's like we have margins of 20% on the portfolios, 25% on the portfolios, very inefficient, short-term products, very high price. We have 20,000 branches, and probably we just need like 2,000 today. I mean, obviously, all that infrastructure was created 10, 15, 20 years ago when there was no cell phones. So you had to have those branches, but you don't need them anymore. So this is the opportunity that we are attacking today. And it's amazing. It's a huge country. A country that is not afraid of taking loans. That's a reality. Imagine if you can take that debt that we are delivering to this. In Brazil today, you have 2 trillion reais of consumer debt, but it has a maturity of 9 months. So imagine that you can take that debt and extend the maturity to 5 years, similar to the US, and that you can lower the rates from average of 40% to average of 20%. Essentially, if you do the math, you can inject in the country something like 7 trillion reais in debt. Imagine what the population can do with that. Better education, better services, more entrepreneurs building companies. I mean, that really encourages other entrepreneurs to build infrastructure to make that happen. And yeah, I think that Brazilians ended up like realizing that that is like an amazing opportunity with a very clear purpose. And that's why really fintech is an amazing play. And the regulator is helping us, obviously.
For one of the key signature moves of the central bank has been launching PIX, which is real-time payments. dLocal is a payments company. Maybe share a little bit about the experience working with the regulator in the context of PIX, integrating and eventually offering PIX for Brazil.
Yeah, I think that the PIX is something that central bankers all over the world should look at, and it's absolutely amazing what the Brazil Central Bank did. I don't think there is any precedent of anything like that. In the US, the Fed is trying to do the Fed now, and well, maybe in China you have something that works as well, but it's private and it's super cheap. But it's really amazing what Bacen did with PIX. We like it, we integrate into it, and we are helping international companies accept PIX in Brazil, which is super valuable for them. And we only wish that more and more countries had the same type of experiences.
One of the great things about this summit is that we can actually take questions from the audience that have been submitted on the app, and we have a couple minutes, I guess, for the most voted question coming from Gabriel Barnasconi, and it's about what differentiates the fintech revolution in Latin America versus other regions like Europe, Asia, the US, and maybe we can start with Fogel.
If there's something that's very special about Latin America, it's friction. We have friction everywhere. We have friction for payments, for credit, in general, to move money, to move goods, to move things across borders. It's a pain in the neck, and that's very painful. But friction is where entrepreneurs thrive. What at the end of the day, we are all doing is eliminating friction. So that's why the opportunity is so great, because there is so many barriers to throw down.
Furio, you're originally from Spain, from Europe, so I'm guessing you are connected to the European fintech ecosystem, although you're building in Brazil.
Yeah, I would never start up a fintech company in Spain. My mortgage today is, I still pay 0.39%, which I just don't understand. How can it happen? And I have had that loan for 15 years now, 17 years now. I'm very happy with that mortgage, but I don't know as an entrepreneur how to improve that. So if I cannot improve something, I would just go to whatever the opportunity is. And definitely that's something that happens in Brazil. Friction obviously is very relevant. But if you think about, you generate money in banking essentially through payments and through lending. And maybe you take rates on investments. Those are like the three verticals. Specifically in Latin America, most of the fintechs are focused on doing something that allows them to deliver loans. And the reason why this happens is because you need affordability. You need to provide a way of someone to buy something in installments. It can be like why? Because we are not that rich. We don't have that much amount of money available to buy an iPhone. An iPhone today costs in Brazil $2,000, which is almost double what costs in the US. And the average salary of the Brazilian population is 1/3 of the salary of a US person. So that means that you need to spend, from a money availability perspective, 6 times more. If there are not like companies that are trying to facilitate that type of transaction, for example, in our case, using your salary and then discounting the iPhone in 24 installments with a much cheaper rate because we get the rebate from the iPhone producer. If we need to have entrepreneurs that actually focus on solving affordability problems for the population. You think, Nubank, yes, it's a payments company, but that monetizes through credit. Take Mercado Libre, ended big time in payments, but then moved quickly into credit, and today is the way that they are actually expanding. If you take Honda, 50% of the net income of Honda motorcycles comes from Honda Bank, because you are financing the motorcycles. Take the Magazine Luisas, you name it, take PagSeguro, take Stone. Everyone needs to be focused in Latin America, especially in Brazil, in lending as a way of monetizing. And that's where entrepreneurship really makes a difference. It's finding innovative ways of providing affordability to the Brazilian population. Those opportunities are not as big in Europe and in the US, and that's the big differential.
Last question before we go to both of you. When you think of the next few years, what gets you the most excited about entrepreneurship in Latin America?
I think a lot is going to come from Latin America. What I personally like the most is the entrepreneurs that dare to go to the world, to innovate. There is so much innovation going over here that could be applied to the old world. That's what excites me the most.
Yeah, I think that we have planted the seed on something that is very unique in the world and that is happening in Latin America today. Latin America was not in the map of any investor 5-6 years ago. It was all about the US, Silicon Valley, then China. China has disappeared. The US is a bit mature. Forget about Russia. India is too expensive and too weird. Brazil is the time to be here. It's the time to be in Latin America. It's amazing. And we need to recognize the effort that was done by the entrepreneurs 10, 15 years ago. You know, the Buscapés, the Peixes, all those guys really planted seeds. And then we had this cohort of companies in 2010, 2011, 2012, 13 that have become really references in the world, not in Latin America, references in the world. Now we have that infrastructure. We have companies. We have the Caminos, the Latitudes that help entrepreneurs to actually be much more efficient in the way that they are deploying capital and that we are doing business. I'm very sure that the new phase in Latin America is not going to be corporate-driven. The youngsters that are coming out from universities, they don't want to go and work to Itaú, Bradesco, Santander, and the likes anymore. They really want to start up their own businesses. And that is extremely exciting. Because when you find the talent and you deploy the capital, then that's the secret for success of an economy. And 10 years from now, it's going to be amazing.
Sergio, thank you for inspiring a generation. Before you go, since we have so many people here, I thought we'd take a selfie with 1,000 people before we get off stage.
Thank you very much, guys.